Now, joining us from Zurich is Dirk Faltin, Director and Senior Economist at UBS Wealth Management, talking about all that's going on in the world economies, but focusing especially now on Europe. And can I just get your reaction to the agreement, this extra 500 billion euros of extra cash? What do you make of it all?
Well, it's a compromise, basically. I think it's what was politically possible. The question is it enough? I think if Spain or Italy were ever to need this money, it would not be enough. But again, it is a compromise. Germany had earlier promised its people that they would never raise these funds above the 500 billion level. Now they had to come up with a solution so that the other countries could actually increase the whole this firewall a bit, and so that's what we've got now. But I think at the end of the day, it will have to be the ECB that really delivers a real solution when things get really tough.
Well, we'll talk about the ECB in just a second, but I want to pick you up on what you say, that this is a compromise. What do you think that's going to mean for the other G20 countries contributing to the fund via the IMF? Are they going to turn around and say, hang on a minute, you haven't done enough here?
That could well be. I mean, we will have to wait until the next G20 meeting, which I think is around the middle of this month, to see what their reaction is. Obviously, the hope is very much that this was enough and they will chip in and allocate more funds. But the risk is that I think particularly the emerging market countries will be reluctant or will only put in more money if they are being given extra powers, basically in the IMF, better participation rights and so on.
You said the emphasis now falls once again on the ECB, but I'm just wondering whether the ECB is actually going to do anything extra now. Is it not going to really be sitting on the sidelines? It's done its cheap funding, the LTRO, and it's going to sit back and say, right, over to you guys, surely.
That's exactly what the ECB is hoping to do, and that's their strategy now. That's what they have communicated, that the two credit lines that they have opened, this is enough, basically, and they're not going to do any more. But I think if worse came to worse and this crisis escalated again with Spain and Italy perhaps in the focus, I think in this situation the ECB would have to re-enter the scene and basically open another line of credit to the banks in order to get yields down again.
Well, you mentioned Italy, you mentioned Spain. How convinced were you by Spain's austerity budget?
Well, I mean, it's a big savings effort that they are making there, around 2.5 to 3% of GDP. That is a lot. The question remains, will this be implemented or not? Obviously, we have first of all, we have this problem with the regions. A lot of the fiscal slippage last year was due to the regional budgets, not the central budget. So it's very much a political question whether the central government can convince the regions to implement those cuts. And I think the cuts that are coming forward now, they have to be extremely painful. They are more painful than what was achieved basically last year and the year before, because now it's about cutting the structural deficit. It's not so much about the cyclical deficit. Now they have to really cut where it hurts, and obviously with unemployment at above 23%, this is going to be extremely painful, and we have seen already those big strikes on the 29th of March, and we could see more of that.
Painful cuts then on the cards, that when you look at the yield on Spanish 10-year, it's up 50 basis points since March. Do you fear that that is now going to continue climbing despite what Mr. Rajoy's government does, and it's going to have a spillover effect into the likes of Italy and Portugal?
Well, yes, I mean, it really depends now whether they can credibly start to implement those budget cuts. I think in this case, the markets could be calmed down again, and yields could perhaps even come down again in Spain. But obviously, I mean, if we see this kind of attempts to weaken basically the fiscal austerity, which Spain has done earlier this year already, I think this will be very worrying from the viewpoint of the market. But obviously, I mean, we don't have to forget that Spain is already with the back to the wall, because, as I said, we have very high unemployment, and every additional cut will bring this unemployment figure even higher and make it much more difficult for the government basically to continue with its policies.
Really interesting stuff. Dirk Faltin, senior economist at UBS. We're grateful to you. Thanks for joining us live from Zurich this Monday morning.